Good afternoon, ladies and gentlemen. This afternoon, we will be covering a conversation here with our head of brokerage, Mitch Stone. My name, Julius Murphy here, the U.S. correspondent. Moving right ahead, just a quick reminder, the presentation is live, so we do encourage you to ask a few questions here on my end. You can see that we will have a message bar in the upper right-hand corner of the screen. Any questions you have, you'll see that highlighted box down there. Type the message. Any questions throughout, please do not be shy. Give us a quick buzz here, 1300-88-1177. Now, forging ahead, taking a look at this disclaimer here, the performance, big asterisk down below. Past performance is no indicator of future performance. Long-term performance shows the potential volatility of returns over time. Moving ahead, make yourself familiar with the disclaimer. We move on to the general advice. Just a quick tidbit here. We recommend that investors obtain financial advice specific to their situation before making any financial decisions and/or insurance decisions. So let's begin. Without further ado, Mitchell Stone, great to have you on board. We had a chance to catch up last week. Just introduce yourself, I guess, here to the clients and give us a little bit of a background, see what we can do for them.
Good afternoon, ladies and gentlemen. Thank you very much for tuning in today. We've got a really good webinar coming up talking about two high conviction trading ideas, a little bit different to last week. So I'll start off with a little bit about myself. I've got a 13, 14 year history in investment banking. Started off at JP Morgan in the futures department, and then after a few years moved over to Macquarie Bank, where I started on the international equities desk, and I guess that's what has sparked my interest. 2 years ago, or 3 years ago now, I left and came over to Fat Profits. Never looked back. We've started off a fantastic trading desk where we offer a quality service to retail and wholesale clients and add value. So I really get my kicks out of teaching investors just how easy it is to invest offshore. And this is what today's webinar is all about.
And now, ladies and gents, Mitch is being a bit modest there. Angus Geddes was actually a client of Mitch's back in 2009, 10, 11, 12, when you were at Macquarie, correct, Mitch?
Yeah, that's right. We got on really well because we have very similar ideas, very similar views on the market. We're both contrarians, and we gel well together.
That's why we call him Bullet. Now, moving on, as we said, for the topics conversation here, you'll see the trading simulation. You will receive, as covered here, the two high conviction international stocks. I still can't believe we're giving these away for free. Mitch, anything, I guess, without further ado, let's kind of jump into it, yeah?
Absolutely. I'm going to try and keep this short and sharp, just like last week. It is an interactive session, so if you have any questions, please ask me. And if I don't get time to answer you in the half an hour, shoot me an email or pick up the phone and give me a call. That's what I'm here for. So we're going to kick off today with our first high conviction buy. Activision Blizzard. Last week we spoke about Tencent Holdings over in Hong Kong. Well, it's a Chinese company listed in Hong Kong. This week, a similar theme. We're talking about Activision Blizzard. It's a US company. They've been in the gaming industry for a very long time. This is quite an exciting stock. They've been performing really, really well. The main reasons we like Activision Blizzard is they've just announced a $1 billion share buyback over the next 2 years, and they're increasing their dividend by 15%. It's not a huge dividend, but it's still a 15% buyback nonetheless. Having a look at the portfolio that Activision Blizzard have, they've got 7 successful franchises that all contribute to their income stream. Call of Duty there is probably the most well known. Candy Crush, that's that iPad game. It's also on the iPhone. Also World of Warcraft, which is an online role-playing game. As you can see, Activision Blizzard has been performing very well the last 3 years. 2016 was a record year for them. They earned just over $6 billion. We're quite confident, given its portfolio of games, that revenue will only grow in 2017. So have a look at the share performance. It's gone absolutely gangbusters. But we think that Activision deserves to be up this high. So we are overall expecting some consolidation in the US market, sort of around 5 to 7%, and this just screams opportunity to us. So any sort of dip, we'd encourage members to buy it.
And now, I guess to kind of piggyback off of what Mitch is saying there, I think what really stands strong here, when you see slowing figures in the U.S., North American operations there, take a look at what's going on in Asia Pacific. We see the most robust performance as of, the past 3 quarters here in APAC and kind of, really gaining some traction in the industry. Now, Mitch, what does this say? I mean, we see exponential growth really and unlimited opportunities there within. But moving ahead, I mean, we kind of take a look at the chart, as we said. I mean, looks like a great time, especially off the back end of that Macquarie recommendation as well. Can you maybe add some color to that, Mitch?
Yeah, that's right. So Macquarie came out last night with an outperform recommendation. So these broker upgrades only feed into the bullishness of the stock and really confirm our buy recommendation. We did start coverage of this stock back in 2014, end of 2014 at $20 a share. We still think it's got plenty of opportunity. The potential for growth is absolutely huge. Julius, you mentioned that its potential in Asia is still there. It certainly is. They've just come out with this ultra successful game called Overwatch. Now, it's been going very, very well in America and Europe, but what's really surprising is it's resonating in China, and this is the first game that's absolutely smashed the Chinese market. And as we know, the potential for growth is massive over there.
And I'm sure for a lot of our viewers at home are probably not sitting on the couch playing on the Xbox 360 console there. But what we have heard a lot of conversation, a lot of talks has been within this virtual reality. Whether it be Mark Zuckerberg, Elon Musk, I mean, so forth, so on. Any entrepreneur of today, Mark Cuban just went on and said that the first trillionaire is going to come from this VR space. When you see a company that's certainly has their finger on the pulse in regards to the VR market, I mean, it has to be assuring as a long-term play here with us. I know it is, at least, but for our viewers at home to take that plunge overseas and gaining a higher level of proficiency there within. Now, I guess, Mitch, to kind of segue here as we move ahead, really, for viewers at home, why do we like the stock? I mean, is this a way to kind of maybe peg our Australian dollars here against the U.S., take advantage of some of this foreign exchange rates that we're seeing, some of these currency battles?
Yeah, look, the main reasons that I like this stock, as I said before, we've got that $1 billion share buyback over the next 2 years, so that's going to support any dip. If this stock dips 5% in the market, they're going to come in and buy their own shares back. They've successfully broken into China, which has got unlimited upside potential, and also they've got a huge portfolio of successful games. You were just talking about currency there. The Australian dollar has been going very well recently, so it's a great time to cash some chips in and buy some US dollars. The majority of this company's revenue is actually derived in US dollars, so the stronger the US dollar, that'll just act as a tailwind for this company.
And now, kind of moving ahead here, we're actually going to sit down with a live trading simulation. Mitch, his fingers have been trembling since the start of this presentation. He's looking to break last week's record. We had him on the clock here at 16 seconds for the execution of the trade, so we'll see if he can top that this week. Take us away.
I don't know if I can beat last week's record, but what I am going to do is show you just how easy it is to invest your own money in a company like Activision Blizzard. We'll stick to the same example I used last week. So we pretend we've got 20,000 Australian dollars to invest in this stock. One Australian dollar at the moment is buying 76 US cents. So that's going to mean we've got 15,200 US dollars to spend. As we saw from that good-looking chart before, Activision's trading just under $50, about $48 a share. So we can buy about 315 shares. So I'm going to show you just how easy it is once more. I'm going to open our live demo simulated trading account. Now everybody's got access to this free account. I'd encourage you to open one. I'll show you later on in the webinar just how to do it. All right, so just like last week, we're going to go to the find instrument up the top, and we're going to start typing the name of this stock in. The code, the ticker is ATVI, ATVI. And there we go. So you'll notice there's three options, right? You've got the CFD, you've got the equity, which is the straight stock, which is what we want, and then you've got the stock option. So CFDs and stock options are leveraged products. We're not interested in them today. We're just going to buy the stock. It's quite important that you look to the right-hand side and you just confirm what country you're actually going to buy the stock in. That's a little American flag, so that's right. Some of these stocks, these bigger stocks, are dual listed. They might trade in Germany, the US. So you're really looking for its primary exchange that has got the most volume. All right, so the stock's now pulled up. We'll take a quick look at the chart one more time. All right, that's definitely it. So it's as easy as this. We're going to hit the trade button. We wanted to buy 315 shares. I had already typed that in before. Once more, we're going to go straight to market. Now, keep in mind, it's the middle of the night in America, so we can't buy the shares now, but we're going to queue it. So as soon as the market opens, it will execute for us. So we're going to hit buy. A confirmation screen will come up one more time, and this gives us a final chance to check. So we're going to buy 15,300 US dollars worth of Activision, which will cost just over 20,000 Aussie. We'll hit confirm. The order has been placed. We'll just hit OK. And you can see on our order pad down the bottom that this order is queued. Okay, so it's as easy as that.
And now this is obviously a great tool as well, where we're encouraging just to kind of work in conjunction with a great research tool that, a lot of investors and institutional clients on the street are certainly familiar with. And, Mitch, he didn't top last week's record, but we still love him here.
I'm moving backwards.
Moving ahead here, Wynn Resorts, also trading in the U.S. Mr. Stone, take us through Mr. Wynn's portfolio here, what we're expecting in the second half of 2017.
Wynn Resorts is an exciting stock. It's definitely one of our high conviction buys. We often talk about these key points of inflection. This stock, we believe, has well and truly reached that. So reasons that we favour Wynn Resorts, certainly number one is its strong management team. It's led by Steve Wynn, who's a real visionary in the market. He's done a great job in Macau, and now he's building a global empire. All right, so Wynn Resorts drives a lot of its revenue from Macau, and that's been in the papers a lot recently. So you can see this is the health basically of the Macau casino stocks, the table count. So in 2016, you can see that tables are well and truly increasing, which is a good sign.
And yeah, certainly, a great sign here. And taking a look at maybe some of the technical factors that we've come across here on the research side of the business. Mitch, maybe run through me 2013. I guess this is a 5-year chart. So let's take a look at, I guess, the rise and the demise here of Mr. Wynn's protege, the Nasdaq position.
So as we can see from the chart, this is the key point of inflection that we're talking about. We found a double bottom here in the third quarter of 2015 and the first quarter of 2016. As you can see from the chart, we've seen a point of inflection, but now it's really started to break out. And when I look at that chart, that's an exciting thing. I want to be an owner of this stock. The reason why it's starting to break out is that we've seen two broker upgrades in the past week. So it's gone up 11% in the past week. Morgan Stanley and JP Morgan recently just upgraded it. So Morgan Stanley said that they believe that Wynn can take greater market share in Macau, and the market is currently discounting its potential. So they've put a $119 price target on the stock, but that is way too conservative. I reckon next stop 150. So it's exciting times ahead.
And it's great to see, when there's an emphasis from the board, kind of getting back to their main focus, focusing on their target market here, their core operations. It's one of those things you can kind of track along. 2013, we hear it a lot here in the finance space, failing to greatness, where you see this great rise, 2013, 2014. You begin to overstaff, overemploy. with less qualified staff, and then sure enough, it catches up. Over 18 months, there you are. Now here we are. At this inflection point, as we mentioned, really poised to kind of have quite the run.
Yeah, looking ahead for this stock, it's the growth projects are going to look so much significant shareholder value. So they've just finished Wynn Palace in Macau. That is absolutely massive. It's got 1,700 hotel rooms. They're building Wynn Boston Harbor over in the States. That's got 670 hotel rooms. That's the only integrated resort in Boston. And they're about to start construction of Wynn Paradise in Vegas. So the empire is growing, and we think they're going to serve as great catalysts moving forward.
And let's jump into it. Let's take a look at the trading desk here. Same example. Let's take that 20,000 Australian dollars. We have a question here from Lorenzo. Why do you show 20,000 as 15.2 US? That's because of the exchange rate. Lorenzo, you're dividing by 76 cents. You should be multiplying there. So Mitch, take us away here. Maybe add some color, reiterate kind of what we said earlier in regards to the exchange rates here.
Yeah, easy. Guys, I just want to give you that tip again that I gave last week. If you go to www.xe.com, that is that fantastic exchange rate website. So you can easily see that $1 Australian will just buy you 76 US cents. So let's stick with our example. 20,000 Aussie, same amount as last time at 76 cents will give us 15,200 US dollars to play with. As we had a look at that chart before, Wynn Resorts trades in America on the NASDAQ. It's trading at $113 per share. It's going through that breakout. So we can buy 135 shares. So I'm going to go ahead now and show you just how easy it is to add this growth stock to your portfolio. You got the timer on, Matt? Oh, all right, so we'll just type in Wynn. All right, and we've got Wynn Macau. It's a different company that trades over in Hong Kong. See the flag, just be wary of that. We want Wynn Resorts that trades on the NASDAQ. And we obviously just want the equity. We don't want the option, so we're just going to buy the straight stock. So we'll just click that. Have a look at the chart. That's the 5-year chart. There's the point of inflection that I was talking about, and this is where it's starting to break out. Okay, so I'll go ahead now and buy 135 shares. You just hit the trade button. Okay, number of shares, 135. Now we're just going to go straight to market. Anything could happen tonight. This is an exciting stock, and we'd hate to miss it because we put a limit on it. So we'll go straight to market, and we just hit the buy. Now you get one more chance, one more confirmation to double check everything. We're spending 15,300 American dollars, which would be just over 20,000 Aussie. We hit confirm. Now, as you know, the market's closed, so that's just going to sit in your order pad, and when the market opens tonight, that will go straight through for you. So look, it's as easy as that.
Now, as we, I guess how streamlined the approach truly is, and how easy the platform. Is there any other offerings, maybe anything outside of the scope of international shares? What else can we kind of delve into within this platform of yours, Mitch?
So here at Fat Profits, as you know, we focus primarily on shares, but this platform has really got it all. If you've got a view on the currency, you can trade margin foreign exchange. You can also trade FX forwards. So if you want to hedge your currency exposure, you can easily do that. Also, we offer stock CFDs. They're contracts for difference. I often get asked, do you guys have margin lending? No, we don't, but we do have CFDs. It's a leveraged product. You really have to understand the risk before you delve into it. But the good thing about CFDs, if you think a stock is going to go down, you can short it. You don't have to go long like you do with margin lending. Also, look, a lot of people have got a view on oil. You can go long or short oil. If you're a punter, you can have a bet on coffee or cattle or pork bellies. The list is endless. Also gold and silver. It's got all of your metals. So really, it's a multi-asset platform. You've got all of your stocks and all of your commodities.
And then we see, not encouraging our clients to trade over in, Amsterdam or Cairo by any means, but taking a look at the access to the markets at hand. Obviously we stick to right around 6 different exchanges here on our end, but for clients, we do encourage having a look, and just for the information element alone, to kind of keep your finger on the pulse and what's happening in some of these emerging markets.
Yeah, look, the beauty of having this international account is that we offer over 36 global exchanges. As I said last week, the ASX only makes up 2% of the global stock market. If you don't have one of these accounts, you're missing out on 98% of the opportunity. So, it's definitely a good thing to have.
And we had a question come across really quick, just to touch on a few of these from Chris. Do you guys personally own stocks in Win and Activision? If not, why not? Absolutely, Chris. So this is all, this has been on the books for quite some time here, both of these positions. Mitch, maybe if you want to dive into that and kind of just explain the process, how we are trading, our house account here, and we're trading our books the same way that we're, giving this information out for free, which is why I'm so reluctant to kind of really fork up the good oil here.
Yeah, we openly tell you guys that we own these stocks. When Angus talks about them in the daily, down the bottom of the daily newsletter, we do disclose that we own these stocks. So we've got our own skin in the game. We're about quality over quantity here. Some people think that it might be a bit repetitive, but we've got high conviction on these stocks, and we're here to try and make our investors money.
Thank you, Chris. And now taking a look at some of the myths here. The first question I think that we commonly come across: I don't know what to invest in offshore. Mitch?
Right, so look, that's what we're here for. You've already made the investment to be a client of Fat Profits. All day, every day, we just scan the markets for opportunities. So you're already there. We often send out our clients high conviction recommendations via email. We've got a new SMS service, which I'll touch on later. But this idea is all over the place. So you don't have to know these companies. We walk you through the whole process.
And now, does this apply as well, say, for some of our retirees, pensioners that aren't all that computer literate or computer savvy? Can we, is there a human on the other end of this line? Is there someone to speak to? Or am I looking at a, John from Wells Fargo here? What's the story of these shadow accounts?
Julius, I've got good news. You're actually looking at him. So if anyone does open an account,
I don't know if that's good news or bad
it's
news.
fantastic news. If anyone opens an account, you can always give me or Julius a call, and we guide you through the entire process from start to finish. So at no extra cost. So we're here to support you guys.
And now, I guess, for the overall account setup, is this something that seems, I feel like for me switching over from my US accounts, it was a very inundated process with, my Commonwealth Bank, but moving over to Saxo, there was no problem on my end. How is this, for domestic accounts for Australia, maybe New Zealand clientele? How does that work, Mitch?
You've hit the nail on the head there. So both Australia and New Zealand clients are more than welcome to sign up. There's no problem there. We can easily transfer existing portfolios across, whether it be international, whether you've got stocks in the UK or America or Australia. That's very easy. We take care of it and we don't charge you for it. So a lot of people find value in that we really hold their hand through the whole process.
And now, I think that's pretty straightforward. We can leave that there. Taking a look, the demo account, there is zero risk. I believe we can get our viewers here. Give us 1 second. The IT team's out in the utility closet having a coffee. Here we go. Take a look at how simple this is. Mitch, run us through the Fat Profits brokerage site here. Opening an account. Let's see, what do we have to do?
Okay, so this is our website. Note that it's the Fat Profits Broking website, not the Fat Profits Research website. So write down www.fatprofitsbroking.com.au. Now, to open a free demo account, very easy. Just go to the homepage, click Request a Demo. Okay, so the actual process takes about 10 seconds. So when our website loads, all right, you just jot a few details in there, click Get the Demo, and then it will email you a link to download the free platform and also your username.
Great. And now, really, why we're looking at some of these I guess bells and whistles here on the platform, taking a better idea of what you'd be receiving here as a client of ours. On the brokerage side, we have begun to compile a bit of a SMS alert. So taking a look at the offering here, and I guess realize how valuable this may be in times of need.
We're not reinventing the wheel here, so all of these ideas are available through the traditional methods like the daily newsletter, midweek alerts, etc. Every now and then, though, we do get a high conviction idea that is time critical, and we want to tell you about them as soon as possible. So if you register, we're able to send you an SMS and let you know what's going on, and hopefully you can capture the opportunity. We only started this service a few months ago, but we've already had great success. So I'll run through two examples. We sent through an SMS back at the start of Feb. Fairfax was at that's an Aussie stock, obviously. Fairfax was at 92 cents. Angus came in one day and said, look, send all of our clients an SMS, tell them to buy the stock. It's at 92 cents. He thinks it's going past $1.10. So here's an example of the SMS that I sent. It was backed up by his commentary in the daily, but that's obviously had a fantastic run. It's up, 10%, in a couple of months. So another example, late last year, I still remember sending this message. It was one of our best. It was to buy Evolution Mining. This call came from Greg in New Zealand. He called me up and said, look, Evolution's been way oversold. There's a lot of political risk there was at that time. And there's huge upside potential. So we sent everyone a message there. And what's that, 35%? So that's definitely one of our better success stories.
And this is for you, Chris. You can definitely keep us modest here. You can audit this on your end, and we'll do a better job keeping everything transparent with our past recommendations, our past positions here, and moving forward everything that we have on our books. All right, conviction buys here.
Yeah, absolutely. So everything's on our website. You can see past performance, etc. As I said before, we're about quality over quantity. We've only sent a few SMSs. We don't do what's common in the industry called churning and burning to get brokerage up. We only send you an SMS when we truly believe it's going to be beneficial to you. All right.
Across the board here, we have over 1,200 attendees, and we're seeing quite a lot of questions on regards to the rates. So I guess Mitch, give us a better idea, of kind of the structure that we're expecting. We're going to pay an arm and a leg for this service. I mean, between the techs, between the streamlined platform, what am I expecting in way of?
So one of the common myths is that it's really expensive to trade offshore, and it's not. We make things really cost effective for our members. So as you can see in America, it's $20 a trade, or 10 cents per share. So, that example before when we bought 135 win, so 135 times 10 cents it's going to be $13.50. But in this case, it'll fall to the minimum of $20 a share. Most trades will be 20 bucks, $20 a trade. The Aussie, the local market, very competitive across the board, 19.95 or 0.15%. Asia and Europe, you're looking at $20 equivalent, whether it be in yen, Hong Kong dollars, and 0.35% on the sliding scale. There is a monthly custody fee. Everybody charges one that goes straight to Saxo Bank for keeping your shares safe. So we think it's a very cost-effective schedule for our clients.
And another question I'm sure would come across, at least came across my desk here. What happens to the dividends earned from U.S. stocks? I mean, is that susceptible to tax? Is there any liabilities there? How does that work with the accountant?
Really, really good question, and a common question. We're towards the end of the webinar, so just keep the questions coming through now. So how do the dividends work with tax? So in the US, when you open an account, you complete what's called a W8 Ben. We actually complete it for you, so we make sure we get it right. W8 Ben is a tax exemption form. It says that there's a treaty between Australia and America, so you don't pay capital gains over there. You pay it here. But this question was about the dividend. In most cases, there's a 15% tax which is withheld at the source, but dividends are just paid into the account like they are over here.
Absolutely. And then the next question here, The platform looks excellent. Is there a mobile version, possibly for the iPads, for Apple, Android, iOS, Android software there?
Really good question. Yeah, the platform does look fantastic, and that is the reason why we chose it. We believe it is the best in the market. Um, Absolutely, you can view your whole portfolio. You can actually trade your portfolio from any device. So you can have a look at your stock on the go from your mobile phone or iPad or laptop, just as you could on your home PC. Very user friendly. There's an app, and that's it.
And now I think that pretty much sums it up. Mitch, any other questions that coming up on your end? That sums it up for my screen. Anything that you've come across there?
No, I think we've answered just about everything. Guys, if you have any further questions, please write my direct line down, 1300 019 979. We'll be doing these webinars weekly. So next week we'll have another high conviction idea. And yeah, that's it.
There you have it, ladies and gentlemen, straight from the source. Mitchell Stone never disappoints. Wow. Thanks for dropping in. We'll catch up next week.
Thank you very much, guys. Appreciate it.
All the best now. Good investing.